CNBC's Neuner says Bitcoin will end 2018 at $50,000. Neuner, the host of CNBC's show Crypto Trader and the 28th most influential blockchain insider according to Richtopia, made a tweet Thursday, February 1 claiming that Bitcoin will end 2018 at the price point of $50,000. The CNBC channel has been increasingly involved in cryptocurrency reporting over the past few months. On January 8, the cable network aired a step-by-step tutorial on how to buy Ripple using the Poloniex exchange as a platform for the purchase. Host Brian Kelly demonstrated the entire process live on the channel. In December 2017, an issue of CNBC's Fast Money mentioned Bitcoin Cash both on air and on its social media accounts. The show made a tweet with two charts that showed a decline in Bitcoin's price and an increase in that of Bitcoin Cash, adding Bitcoin Cash is here, deal with it. The tweet was met with a mixed response from the cryptocurrency community, some users expressing their disagreement with the network's message. As Bitcoin reached a multi-month low on Friday, Neuner's latest prediction has similarly resulted in a mixed reaction, with one reply sarcastically highlighting the low probability of Bitcoin's price hitting the exact mark of $50,000 on December 31, 2018. Mining margins and where to make the most money. This idea that simply plugging your computer or nowadays, specialized mining rigs into the internet and making money out of thin air is extremely attractive. However, it is obviously not as simple as it sounds, and the mining sector is one that has become very competitive and sophisticated. Despite this, individuals who are interested in mining can still join in, and by narrowing their margins, there is the potential to make a decent profit. It all comes down to cheap resources though, and in the case of mining, that resource is electricity. The disparity between electricity prices around the world means that mining 1 Bitcoin in a certain country can be many times more profitable than doing the same thing across the border. How it is calculated. The image below shows a list of countries and the average cost in USD to mine a single Bitcoin. This study, conducted by Elite Fixtures, was put together using consumption required to mine a Bitcoin averaged from 3 different mining rigs: the Antminer S7, the Antminer S9 and the Avalon 6. The study sourced its electricity price data provided by each country's government and local utility companies, as well as the International Energy Agency, IB Times reports. Where to cash in? So, with this data available, suddenly mining across the globe starts to make sense. The best place to make profits mining a single Bitcoin is in Venezuela. The process costing only about $530. With the current Bitcoin price hovering around $10,000, this has the potential for a massive rate of return for South American miners. Additionally, given the country's economic and political climate, it is not surprising to see that many Venezuelans have taken advantage of mining. Not only is it pertinent to mine in Venezuela in times of peace, the South Americans have utilized this cheap electricity in times of crisis, with their own currency inflating to useless proportions. Where not to even bother. A lot of countries in Western Europe, such as Germany and Denmark, are ranked as some of the most expensive places to try and pull Bitcoin out of the ether. In fact, in the current climate, mining a Bitcoin in either of the aforementioned countries would end up costing you $4,000. The mining dispersion across the globe also clearly follows the lines of cheap electricity, as a study done by Cambridge University last year showed that countries in the Far East, especially China, held the title of mining capitals of the world. Mining superpowers. The power that China, and even Russia, hold as mining superpowers comes almost directly from the price of their electricity. China, according to the study, sits at a modest $3,172 per coin, which is still, currently, a 70% return. China has also been profiting from the government being open to letting the miners use excess power in the country, but this has recently come under scrutiny. The Chinese government is now trying to crack down on all facets of cryptocurrency, which has them looking at mining. Russia, another superpower that is benefiting from relatively cheap electricity, which sits at $4,675 per Bitcoin, as well as subsidies from the government, could soon be under regulation and stricter control. The future of mining. As electricity is one of the first expenses that will need to be considered when setting up mining, it makes sense for major mining setups to consider the above low-cost countries to be an attractive prospect. However, as Bitcoin continues to grow, regulators are looking to take aim at different sectors, including mining. There may be other countries where the electricity is more expensive, but regulations around mining and cryptocurrencies are a lot lighter, for example, Japan. There are also certain mining pools and even ICOs that are looking at setting up their operations near green sources of renewable power to try and lessen the expense and the load not only on their wallet, but on the environment as well. Thai Finance Secretary, blockchain is beneficial but people should know risks. Thai Ministry of Finance's Permanent Secretary Somchai Sujayapongs thinks that the Bank of Thailand and Thailand's Securities and Exchange Commission, SEC, need to officially warn customers of the risks of investing in crypto markets, as reported in the Bangkok Post today, February 2. According to Sujayapongs, a working committee on cryptocurrencies, formed by the Bank of Thailand, the SEC, the Ministry of Finance, and the Anti-Money Laundering Office, will soon release a report on how to move forward with crypto regulation. In reference to the future of regulating crypto market investing, Sujayapongs said, "Allowing Bitcoin transactions to be made without warnings and direction from regulators is not acceptable." In September 2017, the Thai SEC showed a willingness to support initial coin offerings, ICO, by announcing that they would be drafting regulations for ICOs, as they may fall into the category of securities under Thai law. With the recent volatility in the crypto markets, Sujayapongs sees a need for urgency in Thailand to come to a conclusion about regulating cryptocurrencies. However, the Permanent Secretary makes the distinction between regulation of Bitcoin, BTC, and of blockchain technology. It is not correct to consider blockchain harmful if we do not prefer Bitcoin, as blockchain technology can create benefits. We can reap benefits from using blockchain technology. Several banks in Thailand have already begun looking into blockchain-based technologies for their financial services. The Bank of Thailand held a meeting in August 2017 with Vitalik Buterin, co-founder of Ethereum, about the possibility of using Ethereum and other blockchain services for improving the speed and security of financial transactions. In November 2017, the Bank of Ayutthaya in Thailand successfully ran a pilot blockchain project with IBM that aimed to improve back-office efficiency. Russia, PM Medvedev sees promise in cross-national crypto regulation. Russian Prime Minister Dmitry Medvedev thinks that cryptocurrency regulation shouldn't take place in just one country, but should be a unified action across all countries in the Eurasian Economic Union, EAEU, local business journal Vedomosti reported today, February 2. At a conference entitled Digital Agenda in the Age of Globalization, held today in Almaty, Kazakhstan, Medvedev spoke about the need for regulation on an international scale, specifically in regards to the EAEU, which is made up of Armenia, Belarus, Kazakhstan, Kyrgyzstan, and Russia. It's impossible to introduce these principles regulating cryptocurrencies in one country. Our approach should be closer to the level of the Union. In December 2017, Putin had suggested creating a new, multinational cryptocurrency to be adopted in all EAEU and BRICS countries, enabling the use of blockchain and smart contracts across these emerging markets. Although Medvedev only spoke in regards to the EAEU, he repeated this idea of a multinational crypto regulatory model in regards to payment services, not just blockchain protocol. In any case, we shouldn't be limited to only national models. My colleagues said here that cryptocurrencies can be used for payment. Let's approach this carefully, because our economies are so strongly and closely linked. In March of 2017, Medvedev had called for the Ministry of Communications and the Ministry of Economic Growth to begin research into the potential uses of blockchain in government. More recently at the Gaidar Forum held in January, Medvedev criticized cryptocurrencies as an economic bubble that will eventually disappear, although he said that blockchain technology will remain. Black January, why is Bitcoin in such a bad way? As January closed, Bitcoin fell towards $9,000, getting closer to $8,000 in the first days of February. It has been a particularly tough month and a half for Bitcoin if one considers that halfway through December the coin peaked at $20,000. The market has taken hit after hit in the days following its downward spiral from the aforementioned high. The only issue is that some of these catalyzing factors have been paper tigers or even worse, fake news. In a speculative market such as the Bitcoin one, which welcomed a massive influx of relatively clueless speculators in the hype rush to $20,000, bad news is especially bad news and damaging to investor confidence. South Korean confusion. Halfway through January, there was a bout of confusion that came out of South Korea, an important Bitcoin hub in the East, as the Ministry of Justice, which independently announced its plans of banning cryptocurrency trading. This sent panic across the markets, in a similar fashion as to when China announced it banning plans. However, it has since been cleared up by much higher authorities, and in fact, the sentiment out of South Korea has been pretty positive following this market scare. In fact, this move was even classed as insider trading as many fought back against the supposed planned FUD attack. Regardless of the clearing up, and the clouds parting over the Asian nation, the damage was still done. The markets managed to claw their way back somewhat, but there was soon more damaging news of questionable integrity to send the speculators fleeing. Old news. In the US, the fear, uncertainty and doubt showed its face when it emerged that there was a subpoena out for Bitfinex and Tether. The former a major exchange and the latter a token issuer. This sent ripples of panic across the community as it again showed that the regulators who have been classed as enemy number one, were on their feet and clamping down. According to the report, the Commodity Futures Trading Commission was sending subpoenas to these two companies, which strangely, were not even US-based companies, pulling alternative questions about jurisdiction also to the fore. However, after the market took an 11% tumble at this news, it emerged that these subpoenas had already been issued, back in early December, according to Nathaniel Popper, a reporter from New York Times. Again, the effect of negative news was apparent, and its validity seemingly unimportant as the markets doubled for a reason that was not even relevant or related. Read it properly. The last bout of misinformation that had its say on the markets came out of India, where a simple case of misreading stirred even more panic. Mainstream media, rushing to get the news out, seemingly misinterpreted a government speech on regulation. The line in question, from Finance Minister Arun Jaitley, read: "The government does not recognize cryptocurrency as legal tender or coin and will take all measures to eliminate the use of these crypto assets in financing illegitimate activities or as part of the payments system." However, this was then blown up into, "Arun Jaitley has just killed India's cryptocurrency party," by a Quartz's article on the subject. The line in equation states that the regulators in India are aiming to eliminate the use of cryptocurrencies to fund illegal activities but avoids mentioning the full legality of digital currencies. The world needs good news. There can be no doubting the power of persuasion and the extent that bad news can affect a market as speculative as Bitcoin's. And, to this end, as more bad news, fake, real, old or late, piles on top of an already fragile confidence, the damage gets exaggerated. Many are hoping for one piece of positivity to right all the wrongs that have been leveled at the digital currency, and for the market to react accordingly. However, what that news could be remains a mystery. Bitcoin mining comes to New York as lawmakers approve power allocation. Cloud mining service CoinMint has won approval to take over an abandoned smelter for Bitcoin mining operations on Tuesday, January 30. As local news broadcaster WWNY-TV reports Thursday, along with local government documentation, lawmakers in upstate New York voted in favor of awarding subsidiary North Country Data Center, NCDC, 15 megawatts of low-cost power. This is subject to agreement of tariffs among members, stated the New York Power Authority Board of Trustees and New York State Canal Corporation Board of Directors. The operation should involve a $165 million investment in infrastructure from CoinMint and the creation of 150 jobs for the population of nearest town Messina and the surrounding area. New York State was previously not known for its involvement or openness to cryptocurrency mining, that title traditionally belonging to Washington State with its cheap electricity. That's been one of our main marketing points, is that we have cheap, reliable power, Messina Town Supervisor Stephen O'Shaughnessy countered to WWNY-TV. It would be good for Messina. I think they are highly technical jobs. We're definitely going to look forward to something like that. The encouraging news comes after reports across the Atlantic in Europe that major energy provider Enel had refused renewable energy sales to the cryptocurrency mining operator Envion, claiming it was an unsustainable practice. The mixed arena continues worldwide, with Russia confirming plans to transform spare grid capacity into mining setups and former monopoly China producing messages about its plans to ostensibly withdraw from the industry altogether. This is a large allocation of power, but certainly 150 jobs is nothing to sneeze at, Assemblywoman Addie Jen meanwhile said about the New York's plans, hinting at local government priorities.